The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Welcome back. It's time to check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. Good morning, Nick, and let's talk about that newsletter that's coming out today, because I think you have something very interesting about something that happened last week when it came to the Fed's guidance on crypto banks. Can you tell us more?
Good morning. Yeah. So in today's issue of the State of Crypto newsletter, which will hit your inboxes shortly, I take a deep dive into the Fed's guidance last week for banks and novel financial institutions hoping to secure master account access. So the short version is, the Fed put out this guidance last week that said, okay, if you want access to the global payment system through our reserve accounts, then we have certain criteria we want you to meet. We have certain conditions for how we're going to evaluate you, and here is exactly how we're going to approach this. And this has been seen as a pretty major step. Finally, banks and companies like, for example, crypto banks such as Kraken and Custodia actually have a path forward to securing this kind of access, which will, again, give them, the ability to interact with the global payment system, which in turn will let them avoid having to use intermediary banks that might deplatform them or provide these same services to other companies in the crypto space that really need them. Now, the problem is, even though this has been a lot of transparency, there's still quite a bit that the guidance did not answer. Specifically, it did say, here's these 6 principles that we want to make sure you meet. Here are these different tiers for how we're going to evaluate you. But they didn't say what the actual scrutiny will look like or what the timeline could look like for an approval. So there's still work to be done.
Yeah, it sounds like something that would be, you would expect a lot of cheering from the crypto community, yet it seems fairly silent relatively to what we usually hear with some more minor, relatively minor announcements. What do you think that's about?
Yeah, I couldn't say. I mean, there have been a lot of companies who, should be enjoying this or should be able to take full advantage of this. And they have so far been pretty silent about just what this might mean for their businesses. I think possibly part of it is just that, again, there is some questions that we still don't have an answer to. So, the timeline one's a big one. A company might not be willing to put in the effort and the resources to become a master account holder if they know it's going to take them forever and ever, or the uncertainty alone might just be enough to deter some companies. We also don't know, the U.S. federal government has traditionally not been wholly thrilled about this idea of crypto companies having greater integration with the traditional financial system. And so even though the Fed says, hey, here's a path forward, and by the way, they said this despite a number of comments telling them not to allow crypto companies whatsoever, and they even addressed this in the formal guidance saying, we don't think it's appropriate to block out any specific type of company. But even though the Fed has come out and said, here's the path forward, we don't know, again, what the level of scrutiny will look like. So, they do have this 3-tier system where if you're a federally insured, federally regulated company, FDIC insured, overseen by a prudential regulator, you're going to be subject to the least amount of scrutiny. If you don't have federal deposit insurance, but you are still overseen by a federal regulator, you're kind of going through this intermediate amount of scrutiny. And if you're neither, if you're just like a state-chartered bank or state-chartered entity, then you have to go through the most scrutiny. And what we don't know is what least, intermediate, and most scrutiny looks like.
One more question for you, Nick. Tomorrow there's also that bankruptcy hearing for Voyager taking place. What are the expectations?
Yeah, so this is probably going to focus a lot on this filing that came out on Friday, where the creditors and the U.S. Trustee's Office both said, we don't think Voyager should pay $1.5 million to 38 employees. And we talked about this a little bit yesterday, but the question that we're really going to be looking for an answer for is, A, can Voyager cut costs anywhere else? Are these 38 personnel so critical that there's no replacement or no backup for them? Or, B, what about the other employees of Voyager? And, I think hopefully we'll get a better sense of Voyager's actual financials at this time, which, one thing with bankruptcies is, there's always been a kind of question as to what the assets are, what the costs are. And we've seen this play out a lot with Celsius, where they've had to put out, different statements at different times saying, all right, well, we're going to, run out of funding by October, or, we have enough funding to go through the rest of the year. Voyager, I think a lot of these questions are still being asked, and Voyager's customers in particular would really, want to ensure that they have the chance to maximize their returns.